Good. Yeah, it was a recording from my previous call. It jumped and like now I start to hear that live. Good. So once again, happy afternoon, happy Halloween to everyone who is involved and celebrating this or other way around. We are preparing our pumpkins here. My kids made sure it's everywhere around the house. Spreaded all the seeds, spread it around the kitchen. So it was funny. And today, finally, going to hunt some candies. My belly is missing some candies. All right, so let's begin, guys. And we have several updates about the market and the pairs. So let's start. First of all, commodities. It's something that we regularly begin with, and the reason is they start to be interesting and relevant. So we have the coffee, first of all, that we are aiming for the next portion of buys due to the big cycle here and the correction, right? We also have the last leg as a triple cycle. So we expect a corrective cycle or any kind of a range, meaning we want a retrace down and continuation. As for now, we are building up this bullish hidden divergence. It's right here. Dropping lower to the 4-hour chart. If this is the first leg that we are building up, now it's the correction, then should be the second leg. So the first leg turned to be the special cycle. Now we are building up the second one, right? So the only thing here is we need to finalize this divergence here. And then we have the synchronization, weekly bullish cycle, daily bullish hidden divergence, and 4-hour chart bullish divergence to be developed and completed. And I show it now because it could be during today, tomorrow, the next 2 days, so you have that on your watch list and your follow-up for all those of you who trade commodities, of course. Now, one important thing to remember, we do not yet have any official higher highs on the weekly chart. We don't really have a turnaround for the long term yet, and the approach should be with a bit smaller risk, at least for the beginning. Then, of course, on the go, we can always add. This is the big view. That's the monthly double cycle. It is confirmed with the weekly, which was confirmed with the daily, etc., etc. Right? So basically, it switched for bullish as long as this invalidation area holds. The next one we discussed yesterday, and basically today it's on the go. Katrina, I think it was with you, right? Natural gas, or yeah, okay. So yeah, here we go. We have this one as the last divergence. Yesterday we saw some little pullback. Today decided to go further. Anyway, this or other way around. The weekly is bullish. The daily is bullish, hidden in that case. The 4-hour chart is a corrective cycle with ending divergence. Breaking up through the trend line, start to create the structure of the higher highs. So far, so good. And as long as this low holds, this is the short-term pressure. If this, now, this is the question I was covering yesterday and explaining that. If it will make this turn around a new low, will that change anything of the bigger view? The answer is no. It will just change the next approach, the next entry. It will improve the next entry for bigger run. It doesn't change nothing. Always remember your big picture and follow up on the small one. So the natural gas was the one that was triggered a couple of days ago, and so far, so good. Next one on the list we have is the sugar, and it's like the coffee. It's a great combination, right? I wish we could trade milk here as well, and it would be perfect latte or cappuccino. Sugar is bullish for us as well on the same approach with the cycle. This is a trio on the weekly. So we expect a corrective cycle. Corrective cycle could be 2 waves. Corrective cycle could turn to be a range. It doesn't change nothing of our plan. Our plan is to go and look for buys. This is a bullish convergence on the weekly chart, meaning daily should be approval for continuation. Daily is building up this bullish hidden divergence, and the 4-hour chart should confirm this bullish hidden divergence as for Now it has nothing like that. So it could make here easily the double wave or smaller triple, double, one more push lower, back to the trend line, and then continuation. Once 4-hour chart makes the bullish divergence that fits in with the daily bullish hidden divergence, this is our time to go and to look to trade it. The best way to trade it would be once the 4-hour chart gives us the bullish divergence, the 1-hour chart has to be the cycle to confirm the 4-hour chart expected move. Once we can say aha, once we have the aha moment, this is the place where we can start looking for our trades. Okay, so remember guys, first of all, validate with the time frames. Treat any different time frames. If it's for longer term, weekly, daily, 4-hour. If it's for medium term, daily, 4-hour, 1 hour. If it's for short term, 4-hour, 1 hour and 50 minutes, but validate it. Once you have the validations without obstacles against you, that's your time to apply any of your strategies, systems, methods, anything you use. Robots, I saw the discussion on Telegram now, some use robots, no problem at all. First of all, validate the direction, because that's where your chances are. When you have it synchronized, when you have that matched your expectation, that's your time to attack. Okay, that's where you will want to be. Okay, that's for the commodities. The next one, euro versus the pound. Now, what we wanted to see for a classical technical setup yesterday was this false break and the lower lows to turn around to start our journey. It didn't do that, meaning it doesn't provide us any of the conservative confirmation. So we do have the cycle from the 4-hour chart. It reached the 161.8 as we wanted. It never gave us the conservative setup. So what do we do in that case? That's always something that we as traders find ourselves dealing with, right? When it fails, and let's say we attack here, and fails and makes the new high, then we always tell ourselves, I wish I was waiting for the conservative setup. When it moves, we tell ourselves, damn it, I wish I would be in the trade. I wish I would go aggressive, right? So what's the right answer? Where is the balance? Remember what I said yesterday, and this is something that I want you to remember for your trading always. There is nothing wrong with aggressive. The only disadvantage with being aggressive is that the chances that you will enter the next opportunity after your first attack fails is aiming to 0. It's too easy to give up after one failure, especially if that's 2 failures, then the third, there will be no attack. That's the only disadvantage by going aggressive. Besides that, I always say, when you have higher time frame synchronized, you can allow yourself play aggressive. In that, Katrina, I think it was again you became popular. You became a superstar, right? Celebrity with the question about the aggressive approach. Can you attack the 4-hour chart? I think it was Monday, if my memory doesn't betray me. I think it was Monday, and we discussed that on the live room on Monday, that what can we attack here with the aggressive, right? Correct? So once again, the answer is, when you have everything synchronized, the answer is yes. Not 1-hour chart candles though, the 4-hour chart. If you get the setups, you can go and try. In that case, the aggressive approach, paying money, because you got here the harami, right? You got here the confirmation of after the harami, basically the red turnaround. Pretty much classical. Did we have any conservative setup? So each of the 4-hour chart legs confirmed by 1-hour chart, the answer is no. We didn't have it, right? We didn't have it. So we cannot go and trade the 1-hour chart trendline breakout. That's the bottom line. 1-hour chart did not confirm. There is no divergence here in play. There is no confirmation for a cycle in terms of 4-hour chart second leg, meaning game over. We cannot rely on this trend line. So what do we do for those of you who trade the conservative? Let me ask you this question. We are trading with the weekly cycle, correct? Meaning daily has to fit in. Does the daily fit in? Yes. Now it makes the bearish hidden divergence. If the daily fits in, 4-hour has to fit in. Does the 4-hour fit in? Yes. It has the two waves, 161.8 and the divergence. And now comes the question. Was the 4-hour chart trendline broken? Yes or no? Did the 4-hour chart create any lower lows? Yes or no? So did you really miss anything of the weekly cycle? The answer is again, no. So of course, in such days when the moves are so slow and you are trying to catch these 20, 30, 40 pips, when you see that move dropping, it feels like, oh my God, I missed the party. But before you surround yourself with these emotions and feeling, guys, always ask yourself the question, where does your sell idea come from? And the answer here would be, you are not looking to trade the 4-hour chart scalp down, right? Well, maybe you did, but in that case, you couldn't do it conservative, only aggressive, right? Can we do that still for longer run? Of course, after the 4-hour chart breaks the trend line. Then, and only then, we can start talking about sell the rallies. So, was the long-term party missed? No, not yet. Plus, take a look at that scenario. Why wouldn't that turn to be, for example, something like triple, double, and one more push higher before the sell? Who said it won't? We don't know. Why we didn't know? Because the 4-hour chart trend line, the same ABCD pattern we just talked about, the corrective pattern of the weekly cycle, it was not broken. So this technically doesn't belong to the higher time frame yet, this move. It's only the reaction of the short-term cycle by itself. Can you trade it aggressively? As I always say, when you have your higher time frame synchronized, the answer is yes. Was there anything conservative here? The answer is unfortunately not. And this is one of the disadvantages of conservative, that emotional situations where you find yourself suddenly regretting for not going aggressive. So where is the balance? Each trader has its own personality, its own trading comfort zone, its own trading emotions. There is no such thing, truth, the absolute truth for everyone. It's impossible. It's like saying that all the football players will play the same style, or all the doctors will talk the same language and make the same decisions, or all the lawyers will do the same, will work based on the same laws or same instructions. No, it's impossible. Everyone has his or her own personality, and you need to find your comfort zone. If you are able to re-enter a trade in your bigger cycles, in the direction of the bigger cycles, after you had one or two small losses, then you can definitely belong to the aggressive traders. If it's getting too much emotional for you, maybe you should abandon the aggressive idea and go with the medium class or conservative, or at least consider to drop the lot sizes you work with, because high emotion tend to be on high numbers. It's a straight relationship between high emotion in high lots, low emotions in low lots. It's very simple. So ask yourself these questions and keep finding your comfort zone. It took me years, so don't feel bad. It took me years to find my comfort zone. For every trader, it takes something different, and you have to find yourself. As a rule of thumb, I want you to remember the simple guide. Guide, you said, right? Or guidance? How you say it? How do you say it correctly in English? Guide or guidance? You got my point, right? As a general guide, um, what you would want to do is to ask yourself, are you in a fully synchronized situation? If two of the higher time frames support you in your aggressive approach, you can play aggressive. If you find obstacles there or lack of clear picture, then be careful. So for all those who are after conservative setups like myself, then this is what we need still to see happening, and then and only then we can start looking for the retrace. Unfortunately, it didn't provide any false break here. If it would, we will be already rocking all the way to the bank. As for now, it's not the case yet. Current market condition didn't allow that to become conservative. It's yet only on the aggressive. So that's for the euro pound. It was and remains bearish. As for now, only the aggressive approach is in play. The conservative, as for now, again, is missing. We are waiting for the next opportunity in terms of conservative. Michael, for your question, as per the bend to bend, the answer is 100% yes. I think we also were talking about that, right? Bend to bend on the daily, the 4-hour chart duplication. 4-hour chart gave you the duplication, gave you the Harami, gave you the divergence. So basically, as per Bollinger Band, what we have in the Divergence University course, that's exactly that time to be in a sell. The combo from, again, same Bollinger Band, same principles with the divergences, but multi-time frame combination. You have the okay for that, you have your trade. Okay, so that's for the euro pound. The first one I wanted to update. The next one is the pound versus the franc. We are short-term buys here. Quick reminder, why? Because we don't have any long-term decision there yet to be taken. So we were talking about the short-term buys, the 161.8 or the 261.8. We were following this special cycle from the 4-hour, and the 1-hour chart had to fit in. So that was our plan from Monday. Here, finally, 1-hour chart gives us the two waves, false break, divergence. And now I have my question for you guys. So is that a good entry? What do you think right here? Yes or no? What do you think, guys? Ahmed, thank you very much. So it's guide, right? Not guidance. Thank you. What do you think here, guys? Is that a good short-term buy? Yes or no? I have 4 yeses. Does anyone think no? 5 yeses. 6 yeses. So no no's? Interesting. You are right, guys. The answer is 100% correct. Once again, quick reminder why daily bullish hidden, 4-hour chart cycle, and the bullish divergence. Each of the legs, and especially on the last one, confirmed to be the divergence cycle, trendline breakout. Fully synchronization, daily 4-hour, 1-hour, right? Here we go. This is the trade. So far, running good, pretty much providing 1 to 2 risk reward, maybe even slightly more. Great for all those of you who are in. Great time to move stop loss to break even, just in case you still did not. Good risk reward, partial cash out. 4-hour chart cycle is approaching to its target. 38.2 was cleaned, 50 might be next. And again, I repeat, we do not yet have any long-term decision yet to be taken for one reason. the weekly here suggests a possibility of that scenario. And this is something to remember. We don't know yet how that would be developed. That could easily turn to be in a structure of a triple double. And that's why currently our trading starts from short term. Will that be developed for long term? You know, it can simply go and fly. And the answer then would be this short term attempt turns to be again into the longer run. But as for now, we don't have these approvals yet. We don't have this confirmation yet. So to make the decision as for now would be simply wrong. Okay, so that begins from the short term, and we will follow up. As for now, our plan works beautiful, and let's see how it continues. Basically, this is the invalidation zone for the current short-term bullish pressure. Okay, so the pound franc also works pretty much well. Now here is the difference between the pound franc and the pound versus the euro versus the pound. You see that, guys? We were waiting for that to confirm. We were waiting for that to make this cycle, to complete the false break. And in that case, it worked out beautifully, right? While, let's say, if you would attack here the aggressive hammer, right? Take a look here. If you would attack here the aggressive hammer, what would happen? Before we could get a confirmation from the 1 hour, what would happen? This would end up as a loss. So here is again the opposite to the euro pound, right? The euro pound feels some of the traders with hard emotions by missing 40, 50 pips, while the pound franc could be easily lost on the same idea. So there is no wrong with aggressive or conservative. There is nothing wrong with any of them. You just have to understand fully the advantages and the disadvantages of each approach. Okay? The next entry would be exactly like that. If this hammer fails, the next entry would be right here, the next harami. Okay, well, of course with the tick. So again, for the aggressive, you fail, no problem, as long as the higher time frames still support you, and as long as you don't have any obstacles on the way, you attack the second time. So that's very important to remember that, guys, and that's why I keep saying that, and I keep bringing up these examples as they happen, so you remain aware of that. Okay? Always remind yourself these things. On weeks like that, when things tend to go slower, it's simply important to stop for a second and remind yourself the bigger picture. Because the emotions can go high when you see a move that you were waiting for, does not provide you the conservative things you were waiting for. It happens, you find yourself saying, ugh, I wish I would be there. You find the next opportunity which doesn't fit in, and you convince yourself it does, and boom, that's where the mistake comes in. So before you find yourself in that place, always remind yourself the full picture. Always. Okay? It's important. Thank you, Catherine. Thank you. All right, so that's the pound versus the franc, which I wanted to cover. Now, the dollar yen, another pair I was asked about. Now, I want to be very, very clear here, guys. We are bearish as long as this top holds. This is our invalidation point from the weekly cycle. Now, remember, if we want to trade the weekly cycle, we must have clear view and clear confirmation from the daily. Daily must be bearish as well. In that case, daily became bullish. What do we need to see now in order to be able to sell again the weekly cycle? What do you think, guys? Exactly, 4-hour chart to be corrective cycle. Thank you very much. Now I have a question for you here. We dropped a 4-hour chart. we need corrective cycle. Corrective cycle could be in two variations, range or two waves. It could be in more, but we don't trade more because that simply would not be fit in a money flow structure. As per money flow structure, that could be two waves or a range. Do we have two waves? The answer is no. Do we have a range? The answer is maybe, because we have a false break that might turn to be a false break here as well. And if that will be the case, and we will go inside, then we can start talking about sell the rallies. But do we have any of these as for now? Yes or no? The answer is no. So can we trade the dollar yen yet? As for now, yes or no? The answer would be again no. Very simple. Now let me ask you this question. The temptation, the seduction, on what level it is at this stage? How hard do you want to go and to make a trade on such opportunities? Once again, when you see the top and when you see some kind of engulfing forming here, how strong do you want to go and to make a sell here? Well, I know that when I was at the beginning of my way, it was so strong. You see that's how easy it is to convince yourself. We say, okay, but 4 hours is a bearish hidden, so that's enough, right? That's enough. Poof, let's go. It's too easy to convince yourself to be in a trade. Sometimes, based on the luck, pure luck, you might be correct. Problem is, luck tends to appear once. The next time, and the next time, and the next time, and the next time, it will not be there for you. And you will find yourself again wondering, why? Why? What do I do wrong? And this is the wrong. You don't ask yourself the question of the higher time frame. There has to be synchronization. At that time being, weekly is bearish, but daily is still bullish. And if the daily is bullish, 4 hour has to be corrected. 4 hour chart not yet corrected. So can we trade it? The answer is no. That's the bottom line. Okay, dollar yen on the waiting list. We're still watching that. Remember the stats on non-farm payrolls weeks. Dollar yen statistically tends to make rallies, right? You know the statistics. I keep saying them every single week of the non-farm payrolls for 1 year now, or maybe even more. Statistically, that's the case. Is that a rule of the thumb? So why don't we go and trade the buys? Because it's smart to trade buys if they fit in your cycles. If they don't try to make the statistics. Okay. So as for now, dollar yen is untradeable. Euro versus the yen. First leg completed of the correction. This. It turned to be the cycle on the 1 hour chart. Now we have a false break on the bottom, false break on the top. We can still see the corrective cycle that can still be inside the range. That can still turn to be two waves. Which exactly will that be? It doesn't really matter for us. If we want to trade the short-term rallies, we can, remembering that we expect or two waves up or a range, meaning that the first leg of the 4 hour chart must be cycle on the 1 hour chart. You take a look on the 1 hour chart and you figure out that you have here a triple cycle. 1, 2, 3. Triple cycle normally comes after correction, followed up by correction. Correction could be in one of the two ways. 1, 2, or range. Correct? Once we have any of them, and there is a very good chance we are going to see both. So two waves and close to the bottom of the range. There is a great chance for that. And if that would be the case with the divergence, that would be the option to short-term buys. Once the 4 hour chart completes its corrective cycle, so makes the two waves or continue to dance inside the range, that would be our places to start and looking again for sells. Why for sells? Because the last divergence from weekly is yet bearish. Daily is bullish, and that's why the 4 hour chart could become corrective cycle. That's exactly the flow. And that's exactly how we approach it. Okay? Now, what do we do if the 4 hour chart simply continues one leg? Can we trade then? without it to become a cycle on the 1 hour chart? No. And that means we are waiting for the next setup. We don't touch it. Very clear. So here is what I show now here, guys, is the flow of the decisions you make pre-trading. What do I mean? You prepare your plan, you know exactly what you want to see to make you go into trade. You do not start building up on the go. You prepare in advance of the day, the beginning of the day, or beginning of the week. I do it at the beginning of the week, right? But if you're a short-term trader, then do it at the beginning of the day, no problem. But you must know exactly what do you want to see. What do you want to see happening on the chart for you to be in a trade? Does that make sense? Because why it's so important? Because when you know that you are not distracted or you are not tempted by the short-term noises, if what you expect happens, you know what's your next step, how you validate it, and how you trade it. If it doesn't happen, that means game over. Moving next. Okay? Very simple. And that's exactly how you control the psychological impact that the market might have over here. Okay? Because again, when you just start your day, let's say you open the chart now. So, oh my God, that's a sell. I have to sell that. Or, oh my God, that's a retrace. I have to buy that. But that's basically, again, you just find something and you convince yourself why it's good without preparing a direction, without validating it. And you understand that this is like shooting in the dark. Maybe you will hit it, maybe you will not. And somehow the statistics tends always to go to maybe not, right? Maybe not. So remember, prepare your plan, follow it, validate it. It happened, trade it. It didn't happen, wait. There is always tomorrow when it comes to trading. Bella, yeah, of course, it's recording. It's recorded, and I will upload it right after. Okay. So for the euro yen, guys, this is our plan. We are waiting to validate the two waves on the 1 hour chart because we are now waiting for the corrective mode after the triple cycle. If we can validate it, and that might happen during today, that might happen during tomorrow. But if we have that, we can go long. As long as we did not have that, we can't go long. Now, let me ask you this question. What do we do if we suddenly have the rally from here? Skipping. Why? Because we don't have the setup to confirm what we expect. And in that case, that would simply be the two waves we want to see on the 4 hour chart before the sell. If that what happens, first leg already approved to be cycled by itself on the 1 hour chart. If the rally happens, we will have to approve the second leg. How do we do that? If the rally comes suddenly, then this will have to be cycled. Double or triple or special doesn't matter. But there will have to be a divergence here. And when we approve that, that's our next longer term opportunity for sell. Do you see how the flow goes, guys? We prepare, we follow. If what we prepare follows, that means we can trade it. If any of the pieces in this puzzle is missing, move on. There is always another instrument. There is always tomorrow when it comes to trading. Next one, dollar versus the franc, still dancing around the 101, the critical zone that we were waiting for, 101 and slightly higher. The daily divergence is still there. The 4 hour chart divergence is still there, even though it starts to become tricky, right? But it's still holding it for us. The 1 hour chart has no setup though. So we're still waiting for the next false break and convergence to happen. As long as we don't have that, we can't really trade it. Now take a look, guys. Is that or could that be called a convergence? Nope, exactly. No way. First of all, there is no lower low here, right? It's more like in the divergence pattern. Second, the two candles rule here is completely mass, right? All these small candles tell us nothing. That means forcing our needs into the chart rather than forcing the chart into our needs, right? So what do? Waiting for the next setup. Very simple. So we are still around the zone. We are still there. It is still looking for sales. No, we don't have the sales coming yet. Therefore, waiting zone. That brings me to the euro versus the franc, which was and remains bullish for us as well. We still expect the continuation. CAD franc and pound franc, right? All these we are bullish. Now that brings me to the next ones: New Zealand franc and the Aussie franc. The New Zealand franc is still. Thank you, Denise. Bye bye. Have a good one. Have a good day. Please watch the rest of the recording or the report. So the daily is still sitting around the 100 level. 4-hour chart does not confirm the last leg. There is no divergence here. However, there is one on the bigger view. But we don't have any lower low. We don't have any trend and breakout. We don't even have the 1-hour chart confirming for us lower lows. Why? Because there is no divergence between these two highs, right? 1 and 2 at that point. No divergence. No divergence, no convergence. So the New Zealand franc is simply not ready, and there is a good chance we are still heading towards the 161.8 before the next sell. Once again, patience, patience, patience. Don't force. Let that happen. Okay? So that's for the francs. Pacific pairs, euro versus the kiwi. Sitting on the 261.8, right? Bouncing from that. You can see how it's slowing down from this leg, last leg, and look at the candles. From big candles at the beginning, you got several small candles in a row, slowing down clearly, making 3 spikes, growing spikes on the bottom. Classical candle reversal, completing the divergence, going to the 1-hour chart, confirming it to be a cycle by itself. 1-hour chart gave us this, this, and this. That means we are accepting a short-term retraces. Okay, very simple. Daily has basically the idea of the two waves for us, or a range. Both scenarios mean sell the rallies for us. Since this is now a special cycle, triple cycle, doesn't matter how we name that in that case, because they represent the same, we have to get a corrective cycle. Corrective cycle could be 2 waves. Corrective cycle could be any ranging structure before we move on. So short-term rallies with bullish setup on the drops is definitely acceptable for buys. Okay, euro versus the dollar invalidated the last low, meaning the short-term possible rallies is irrelevant any longer. We never managed to get any trendline breakout on the 1-hour chart. We never managed to get any turnaround after the retrace with higher highs. So basically the pressure continues yet bearish. Want to remind you that our magnet zone suggests us the 110, 111. Remember, I was talking about it on Monday, also on the weekly outlook. Here we are. So by ideal, we should get closer to that. That's where we have our monster magnet. If we come here, prepare yourself for some healthy bullish period. Most likely, of course, surprises can happen, yeah, but technically that's what it's suggesting. Meanwhile, it is yet bearish. last low broken. 1 hour chart now doesn't provide any divergence, so the long-term bearish is in the game, basically holding on. And sell the rallies. Yeah, it was always the case for the longer run. The dollar versus Canadian approaching to the 132. I want to remind you, this is the place where we should be looking for the cash out and for possible reversals. And now it starts to be relevant because the last leg now starts to be, take a look how it looks like on the 1 hour chart. Okay, so this is what is building up. Pretty beautiful scenario. Not two candles here in play, but the push is in triple cycle, and the next leg is also pushing in triple cycle. Sorry, that's the place. So we would want to see that finalizing the stop here, right? Ideally creating some kind of false break, and then basically the trendline breakout. Well, the last trendline in that case would be here. Okay, so watch for that. Let it happen. For all those of you who are riding the buys, that is a very good place to start partially cash out once you get the reversal signs. Okay, beautiful level around the 132. It could be slightly higher, no problem with that. Could be slightly lower, no problem with that. That's the place, that's the zone. OZ Kiwi. Now, OZ Kiwi, we were bullish, we are still bullish. We were waiting for the retrace, two waves retrace to join the weekly and a daily bullish pressure. Two waves, bullish divergence. Good. Can we go and rely on that? The answer is yes. OZ Kiwi validates the bullish pressure for us, and it's time to look for buy setups. Any retraces, we are looking for the buys. Okay. Little invalidation for the short term is of course the last low. If it breaks it, it doesn't change nothing of the higher time frame. It will just change the timing because we will be waiting for the next low and the next setup. Our plan for long term was and remains bullish. And that's basically all from my list. No, sorry. Where is the indices? So the Nasdaq, the daily bullish divergence, accepting 4-hour chart corrective cycle. 4-hour chart could be two waves. 4-hour chart could be a range. Which of the scenarios will that be before the next portion for sale? We don't know, but the short-term rallies after drops are acceptable. The same with the German DAX. Basically, daily has a divergence, so 4-hour chart could be the corrective cycle, meaning two waves with the divergence to end, or simply play in a range. Sorry for the ugly drawing, something like that. Okay, so indices on the follow-up list. Gold is bearish for the long run, but we do need to break the trend line, right? And the short term, we got this divergence, so we expected the retrace down with bullish signs. Currently, we don't have any bullish signs, right? We don't have any bullish divergence. Hidden divergence is gone. Here we can't. Let's measure. I didn't measure that, so give me just 1 second, guys. I didn't check that yet. No, we don't have any hidden divergence in play. 1-hour chart. No two candles rule, nowhere on the go. No, nothing to do with the gold, guys. Nothing to do with the gold. For the longer run, it will return bearish after the break of the trend line. Remember that, right? And then it's good sell the rallies. Until then, it can easily reverse yet and continue make something like that. But to be able to trade buys, you need the 4-hour chart to bring you the bullish idea. It doesn't. We don't have any bullish hidden divergence. We don't have any two waves retrace. We don't have any range. Nothing. So we can't work with that. Okay. Anything else, guys, from your list? Anything else that you wanted me to cover, but I didn't? Or dollars are, wow. Dollars are. You like this pair, aren't you, Simon? Let me do it this way. USD ZER. Short term, long term, what's in your mind? No, short term or long term. It's in your mind. You are a sell, but short term or long term. Ahmed, yes, the WTI is the oil. You have also UK oil, but it's separate. It's under different symbols. Okay. Simon, are you for short term or long term? You don't answer my question. Long term. So based on weekly, I can't even say we have clear cycles here. Let's check here. What do we have? The last divergence from monthly is bullish. Two-wave cycle, nothing really help us. Weekly was two waves, but reach the 38.2 doesn't help us. Also not good. So bearish divergence, meaning daily corrective cycle. Daily is corrective cycle, so two waves with bullish divergence. Bullish, I am always bullish. As long as this last low holds, it looks still bullish. As per sell, oof, I can't really find any levels here. I would be paying attention if we visit the next station of the cycle here, right? Like once again, visiting the 100 or 161.8. But at this stage, as long as the last low holds, I don't see any sells. Maybe short terms, yeah, something like that, but I don't see anything. I might be wrong, not my pair, I admit. I don't know. Sorry, Simon. My view is bullish here, not my pair. Okay, sorry. All right, guys. Thank you very much, John. Thank you very much. So enjoy your Wednesday. Have a wonderful evening. Have a good night. I'll see the Telegram groups, of course, and we meet tomorrow. Good trading. And remember, guys, work out with your synchronizations. Work on that. Prepare your plan. Know exactly what you want to see. It will really drop to zero the emotional impact of the short-term movements on you. You will focus on the picture. You watch on the chart. That's what I want happen, yes or no. Yes, boom, I know how to trade, how to validate and to trade. No, I don't trade. Move on. You will find yourself slapping with the pairs quickly. Tack, 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 tack. 15 minutes making the decisions if you have anything to follow or not. And that's what it has to be. Work on that. Instead of trying to figure out what is the perfect entry, it doesn't exist. It does not exist. Try to figure out how do you work on your synchronization, on your plays, and what is your personality. Can you work with the aggressive? Can you wait for only conservative? Find your own middle. It takes time, it takes effort. Track record yourself and keep working exactly on that, rather on looking for the perfect setup, for the perfect timing. It doesn't exist. It doesn't exist. There is a good timing, right? And the good timing, the best timing, what we call, is when everything is synchronized. Not in terms of it's a guaranteed profit. No. In terms that this is the best place to start your trade. And in the business of statistics, that's what counts. Okay? Take care, guys. Have a wonderful day. And I'll see you later. Bye for now.